Welcome to TheoTrade. This is Don Kaufman. You are watching the TheoTrade Weekend Update, October 24th, 2025. Just about 20 minutes to go to the cash close. The S&P's exploding back to the upside. But I got to tell you, all the trade today was basically on the CPI report that meant absolutely nothing. Inflation is kind of cooling, but still kind of near 3%, which is still kind of high. The government shut down, which is definitely going to damage the economy. GDP is going to be injured. Nevertheless, the Fed is still going to cut next week. Nobody seems to care about anything. But the marketplace immediately spiked higher on this kind of softer CPI that came out. But look, here's the real catch to this one. I'm just jumping right into it here on this TheoTrade Weekend Update, and that is the SPX. I mean, the SPX, okay, what occurred? Well, we were trading out in the middle of nowhere, and this morning we spiked right there. This is what we term the upper edge of the expected move. Let's actually show it a little bit more context. Each and every week here at TheoTrade, we talk incessantly about the expected move. And the reason we do so is how incredibly efficient expected move happens to be. For those of you that do not speak expected move geekisms, what the expected move happens to be, and I'm going to show it here in just a moment, it's the options marketplace depiction of forward risk. And this week, okay, this week, meaning the week we're just finishing, had about $135 expected move. And that comes from last Friday, okay, comes from the options close. So the options last Friday at the close, okay, depicted that this week should have $135 of movement. Here we are, okay, exactly 1 week later, we've moved $135 on the button. And it's not just like 1 week, you know, you can just look back very, very briefly. I have data in the SPX where I hand drew every one of the expected moves and continued to do this since 2017, like literally, like, you know, you're like, that's crazy. It might be crazy, but I've been doing this. It's, you know, I'll be excited when I make a decade of like hand drawing expected moves, but literally you look back, okay, and we've been talking about it for almost a decade now. Look how efficient this is. The marketplace spikes this morning on CPI. That's why, you know, people are talking about, well, CPI means this and it means that. You know what it means to me? Not a damn thing. Who cares? Who cares what CPI meant? Because it had nothing to do with CPI. The marketplace was out in the middle of nowhere, latched on to some news that it thought was good. Boom, expected move. That's it. Okay, over and done with. And then the rest of the day, we do a little dance, make a little love, get down on the expected move tonight. And that's kind of what the trading session broke down to. And what's interesting about that, I'm going to show you a lot of interesting things here, but what's really interesting about that is the S&Ps, they've traded crap size today. There's 20 minutes left in the trading day. We've done 1 million contracts in the S&Ps. And again, if you don't speak like S&P, you know, geek, this is a pretty big break, you know, and we're up to, it's an all-time high, which again, we're going to talk about in a moment. It's an all-time high. And the volume, it sucks. It just does. And you know, sorry, but the volume sucks. And what the volume being low in the S&P futures means, okay, there's not a lot of hedging activity. Nobody gives a damn because we're sitting at the upper edge of the expected move. That is kind of the happy place for trade. It's where everybody kind of expected us to go, either higher or lower in any given week. And there's a lot of trades, obviously, that we do here at TheoTrade that are, you know, all encompassing of the expected move. Now, time out, okay? I wanted to cover that right off the bat and talk a little bit about the expected move. And, you know, because people are all hopped up about CPI, it's like the only data point that we've gotten now in the better part of a month. Like, you're just not getting any data out. So everybody's like all excited. And when you did get the data, it didn't mean anything. I'm going to show you something here in a minute that's actually a little bit shocking, you know, and this to me is the most interesting area of trade the entire week, bar none. And it sums up everything. I'm not going to sit here, okay, and prognosticate about levels in the S&Ps this week. Look, okay, what else can you say? We're at an all-time high. We actually broke higher today. Okay, what else can you say about levels? Not much. If you take a look at the QQQ, the Qs are also, okay, gapped print higher inside of the NASDAQ. Great. The AI trade's coming back on strong. The only thing weak today is energy. And no surprise, that probably overshot a little bit. If you look down at some of the sectors in here, and I've actually got kind of the sectors mapped out with ETFs. Okay, yeah, materials sector, nominal, like the XLP, okay, which is consumer staples, is down a little bit, possibly has something to do with the government closure, okay, the snap cards and so forth. It's a big area of contention. In all seriousness, no, this is going to have an impact, okay, with the government shutdown. So XLP is down a little bit. Retail is basically flat, but generally speaking, it's the AI trade, okay, that took us back up here, and everything other than pretty much Tesla, okay, has got a kind of a strong bid under it. So push that aside for a second, okay? As I said, levels is not where it's at. There's a volatility situation in the marketplace, and that volatility situation to me is coming to a head. And I'm actually going to show you exactly what I mean. So as I said, we're trading on the upper edge of the SPX expected move. Now, as markets today, okay, went higher, which they absolutely did, okay, these markets obviously went higher today. When you go out and you trade puts, okay, what happens to puts as the markets goes higher, okay? So imagine, okay, that I've traded some puts. Doesn't matter whether I bought them or sold them. I've traded puts. As the market goes higher, the value of those puts should pretty much go where, right? As markets go higher, the value of the puts, okay, should go where? Down. Yeah, that's not happening today. When I say that the volatility situation has come to a head, back month puts, and what that means, and I'm actually going to show you exactly what it means. Back month. When I say back month, look, I got positions out here in January. You ready for this? I'm going to open up a bunch of strikes. Okay, you know what? I'm just going to open. Let's just do this. Let's open them all. Let's open up every strike. Okay, because I want to show you, like, look, put your money where your mouth is. I got positions. I own puts. I'm short puts. I'm short puts and short puts. You're looking at a big rally. Okay, and I'm going to tell you right now, I am actually watching my position in real time. My position this morning before, okay, CPI came out, I was up more like 48%, and I have been trying to close this spider trade. The market, okay, rallied substantially, okay, and yet the puts are going slightly higher in value. That blows people's minds, and you're like, what do you mean? That doesn't look. What I mean is these 570 puts, okay, these 570 puts, okay, they are not doing what you would think they would do. As the market's actually rallying, you think they would, lose a ton of value. And it's true, they're losing some value, okay? They're losing some value, but the ones way out of the money here, okay, aren't really losing any value at all. In fact, okay, these really far out of the money ones, the skew, that is their implied volatility, okay, has gone quite a bit higher. Again, the implied volatility has gone quite a bit higher. There's a shift in the back month. I know I'm 84 days out, but there's a shift in implied volatility skew 84 days out. You're like, why the hell should I care? This is the kind of stuff that, everyday trade, I don't look at it. This is what I'm looking at right now because my positions are not doing great because there's this big shift in implied volatility. And the positions, okay, that are not, like this should have made 50%. I should have been out of it. You're like, well, who cares? Look, the implication has nothing to do with my position. My position just happens to display something otherwise I don't think even I would have caught. The position, okay, displays there's trade buying back month volatility, okay, way out of the money. Does it mean that the market's going to crash and burn? Absolutely not. But I'm going to tell you right now, okay, back month volatility is bid. Back month volatility is bid. And there's actually, obviously, there's a symbol for this. It's skew. The skew symbol, and I'm going to explain a little bit about skew here. Okay, in the history of skew, okay, we're definitely up there. And I'm actually going to highlight this across your screen right now. We're right here at like this 154. There are only a few instances of skew being above where it presently is, like right at that 154 level. Okay, what skew measures, okay, if we go over to the SPX, it measures, okay, 30-day, okay, IV calls, okay, versus puts. So it looks at put implied volatility and it looks at call implied volatility, and it kind of measures the differentiation between put vol, okay, and call vol. And the bigger the differentiation, okay, that is the higher the skew reading. I'm not looking at 30-day skew. I'm actually, and I'm going to use the spiders in this case, I'm going out like 84 days. Okay? Trade, see something. I don't know what the something is. You don't know what the something is. But I will tell you this. I've actually talked today, okay, to some other traders, okay, that manage risk for pretty significant size firms. Firms, okay, that you know and trade on. I'm talking about some of your retail brokers. Got them on the edge of their seat. It's got me on the edge of my seat, because who's out there buying back month volatility right now? Very, very quietly in the backdrop. They're not even buying short-term crap. They're actually buying it back here, knowing, okay, that most people are not going to pick up on it. Okay, it is a very, very stealthy way to get. So I looked. By the way, I opened up like volume and open interest, and I was kind of digging through here. Yeah, 10,000 actually traded out here. Okay, I don't even know if they're buying these or selling these. I don't know if they're getting in or out. Okay, there's some decent contract size, but this is the spiders. Okay, the SPX. Okay, the contract size is just wild in the SPX. It's so hard to read this. Okay, because there's so many strikes. So there's definitely activity going on right now. And again, a few thousand here, a few thousand there. I mean, this crap really, really adds up. Okay, but I can't tell you, okay, I can't tell you why they're buying back month volatility. I can only tell you right now that trade is buying back month volatility, and my own positions, okay, because I can't get out of the one of them. My own positions reflect that. By the way, it's not just like one position. I can't get out. I'm working another order here. This is an order, okay, for an option that I've been trying to buy back. I'm trying to buy this option back. My limit price is 12.25, and markets are pretty close to highs right now. And this thing has not budged in price all day. I just can't. It's not just one position. I can't get out of several different positions because the volatility has actually gone higher. And again, that's not usually something that goes on with a marketplace sitting at or near an all-time high. Moreover, if you look at the volatility futures today, okay, I didn't even necessarily want to go this route, but if you look at the volatility futures, okay, they're basically flat. They're not giving up like they should. You can see actually a spike here. That's not a spike. This is actually a contract roll, okay, this week. So for the most part, volatility really, even with the rally this week, it's not abating. Okay, volatility is not abating, and most people think it is because they look at the VIX. Okay, the VIX is kind of a ridiculous instrument, though. That's 30-day. That's 30-day, and it's much more near money volatility. Okay, but it's 30-day volatility. Of course, I can scroll down. Okay, I can look at VVIX. VVIX is the volatility of the VIX. It, again, do you see it backing off today? On the contrary, the volatility of the volatility index, it's actually what? Okay, it should be getting crushed today. It's basically flat into the day. Some very, very unusual volatility going on. And if you take a look, this is 3-month volatility. This is like a VIX, but like 3 months out. It's definitely down this week. But again, the calculation here is nothing, okay, compared to looking at like out of the money put vol. And that's exactly what I'm doing. All right, so keep your game face on. It is weird right now to see this. And it's got me I wouldn't say like just sitting on the sideline. I'm not sitting on the sideline. I'm trying to close some positions and forth and so forth. But it's definitely got me less engaged to want to open up new positions right now. I want to see where this is headed. That volatility, and I was saying this on Wednesday, and I'm going to say it again today. Volatility refuses to really crush out. And again, to like kind of the newer trader, like, oh no, volatility has crushed. No, it hasn't. In fact, in the back months, it's actually rising. That skew is actually going up. So I'm stressing to you right now, just be a little bit careful with allocation. A little bit careful with allocation. Keep your head in the game. Volatility, it's got to get the absolute crap crushed out of it because, you're at an all-time high right now with literally like all-time high with volatility coming up in those back months. The two, again, they don't jive together. That's why I'm saying volatility situation has clearly come to a head. Somebody sees risk in the marketplace. It could be hedging or it could be taking, a downside shot, and you don't know which one it is. Moving on over here. Gold chaos. Crypto has not recovered. I'm actually going to start in this conversation with crypto. So Bitcoin. Any recovery in here? By the way, I like to generalize Bitcoin, crypto, whatever. I don't want to talk about every like weird alternative coin out there. But here's one that has been a little bit surprising. There's some strong sell side activity from almost 130,000. Crypto kind of comes apart at the seams, comes all the way down to 104,000, bounces. We're sitting right at what I would term a very key inflection point. Now, here's one where I will talk about levels extensively. And yes, I'm looking at the Bitcoin futures, much more comfortable with this. This 110 level, to me is all that stands between us and somewhat of the abyss. You start breaking through 110 again, and it's a wide open shot, into 95,000 or even below. This is one again that I think people have to keep a closer eye on, because what resonates with me is that if crypto actually does break, it's going to spill back over into the S&Ps. So it's a trade I'm watching right now. Nothing more, nothing less. I gave you kind of the level, like you're at that 110. That's the key inflection point. And I would suggest to you that news is going to break this weekend. Almost unequivocally, news is going to break this weekend. I'm surprised that the S&Ps are kind of holding it together the way they are, up about 0.8%. But crypto could be a really interesting indication over the weekend as news breaks. You're like, why are you so sure news has been breaking? Well, every weekend, actually, lately, we've seen quite a bit of news shifting markets to some extent. With that, I want to couple in the gold trade, because gold, the way gold broke looks a lot like the crypto market. But the one thing I just want to say, in fact, I'm a little bit more comfortable right now also going to GLD. To me, GLD and the options trade in GLD, is the epicenter of what's really going on. I mean, GLD, its volume in the options has really dropped. This is 800,000 contracts. It's only doing 70% of what it was doing over the previous 5 trading sessions. Nevertheless, still 800,000 contracts have traded today. Gold, the chaos has kind of cooled off just a little bit. So it breaks back down. But before you get all hopped up about this, just stop. Like, people get all hopped, it's coming down. I want to show you something interesting about it. And to me, this is all that's interesting is simply that, I talked about expected moves to kick off this video. Well, here you go. This is the weekly expected move. And gold, is unruly to the upside, unruly to the upside, unruly to the upside, shatters the upside. This is like a 2 deviation move, breaks apart. The world is coming to it. And please, it's right on the lower edge of the expected move. So stop the crap. Gold is exactly where the market said it would be. To a freaking T. It's on it. It's literally on the lower edge of the expected move. So the next person that actually says gold came apart, gold hasn't come apart. It hasn't even begun. I want you to understand that. I want you to keep that in mind, because gold has not come apart. It hasn't even begun. If there's going to be sell side activity, let's get wild. Let's breach the expected move. And again, everybody's talking about gold chaos. Now, I'm kind of focused a little bit on the crypto side of it, because again, I think crypto spills back over to the S&Ps a hell of a lot more than gold does. Okay, gold is like, a distraction right now. Okay, it's gamma gone wild, but I don't think gold is necessarily going to destroy, some of the AI trade where some of the crypto markets spills back over specifically into AI. All right, you can see S&Ps. Look at this. We're getting crazy. This is actually like the biggest movement we've seen all day. It's nothing. Okay, remember, where are we? Right on the upper edge of the expected move. Where we've been stuck all day, right on the upper edge. This is what I often term, and I said this in the first 15 minutes of trade today. I said, chicken's done. But once you hit the upper edge of the expected move, the trade was just going to die out. We're just going to basically ebb and flow right on the upper edge of that expected move. Man, that is one hell of an efficient trade, right? Last thing we talk about is the expected move. You're coming off of a week with a $135 expected move, okay? What to expect next week? Survey says, well, next week ends on Halloween. You're looking at about a $112 move. That's not settled yet, but about a $112 move. So what's interesting about this, though, is you come off this $135 move. The week before that, you had a $197 expected move. Now, okay, you're looking at about $112. What's weird, though, is the 197, we missed that one. The 135, okay, we hit that one pretty much spot on. The 112 looks fairly low versus some of the risks in this marketplace. Again, okay, the big takeaway on this weekend update, okay, head in the game. Volatility situation has come to a head. Okay, there's definitely trade buying back month volatility right now. I say that with unequivocation. So that implies either hedging, okay, or trade actually taking an outright bearish position in the marketplace. Thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.